Hey everybody, welcome back to Trading with ThinkScript. My name is Mike Fairborn, Senior Manager, Trading and Derivatives at Charles Schwab. Folks, we've been looking a lot at trends in the market over the past few weeks in terms of a lot of the ThinkScripts we've looked at, which is good to focus in on trends. But we also want to look at those time frames, kind of like what we're seeing in the market right now. Those sideways channels ahead of a larger potential breakout. A lot of companies are out there, and some of those have already begun to break out. We'll see if the market breaks out as well, like the S&P 500. But we've got some additional ThinkScript that we can take, additional ThinkScript we can look at today to help us and kind of move beyond the TTM squeeze. So we're going to be hitting that, diving into details, and hopefully my scan's back up. I had been running it earlier, a little nervous about it not being up, but it should work for you guys when we share it here in just a bit. So with that, welcome all, and joining the chat by a good friend, colleague of mine, JB. You'll see him. That's James Boyd in the chat. Great to have James on board with us. Very knowledgeable on this topic, as well as, of course, fundamentals. His class is fundamental class. Encourage you to check that out. He's got a great technical analysis class, an investing class. A really great presenter. So appreciate him being here with us. All right. Well, with that, let's turn it over into some disclosures till we can get going here. All right, information here is for general information purposes only and should not be considered an individualized recommendation or endorsement, or I should say individualized recommendation or personalized investment advice. Paper Money software application is for educational purposes only. Now, backtesting results that we do look at sometimes in this class, we're always looking in the history, the technical history of many charts here. Those are hypothetical. There is no guarantee that the same strategy implemented today would produce similar results. Now, investing involves risk, including for some products more than your initial investment. Past performance of any security strategy does not guarantee future results or success. And there's a look at our futures. We might take a look at futures today, just the charts. We don't trade futures here, but there is a look at those disclosure items. All right, well, let's do this. Let's take that. Let's just jump right on into our trading here. I'll go to the markets. Before I do that, though, yeah, this has been in the news, right? Kind of just we'll hit this real quick. NVIDIA. So NVIDIA, this is just a good quick way to get to it. I've got the daily 35 chart up top here. Just a couple of clicks over using my arrow. Take a look at that 5-minute chart. You can see that the extent of that pullback, but there's actually more to this, and it happened post-market. There were a fair number of traders looking at this, and just a quick note, I know many of you know this already, but just go in under equities. Click down here under the axis and click on time. Show that extended hours trading session, and boom, you get it right there. And you can really get to see what actually happened here. We shot up to just, about 23.5 range, right? Very close to it right after hours. And then we did, I think they had better than expected results. And folks, they did. 145 to 162. I did see it. I just want to check out those specific numbers, but really looking at it from this perspective, just clicking, using some of this, it just barely fits in up top. But from that high to today's low is getting close to 10%, just a little over 9% there from that range. So a lot goes on behind the scenes. A good quick way to take a look at that is right there. Now, that could be more useful, I'd have to say, too, around an earnings event. You kind of get to see the extent of it. A lot of volume there. What that can mean is I push back into this range, coming in right over here. I mean, that means we shot up to about here, right up to this level after hours. But don't be surprised if we do make it up to this level, that we might see some resistance up there. Oh, just a quick note on this, because it is quite interesting. And by the way, although we're not going to spend much time focusing on the TTM squeeze, we're going to go beyond that today with another indicator. But look at that. It just shows the extent of that price compression. Okay, into a sideways channel, moving out potential, but halted twice, holding still below that 200-day moving average. Okay, folks, well, hey, I'll tell you what, picking up on this theme, though, we talked last week about the zigzag indicator. We flipped that into a scan so we can pick up when there are bigger percentage moves off the bottom. We saw some of that like on a stock like NVIDIA. I know we looked at it a little bit last week too, ahead of this week's earnings. But we also have to recognize that a lot of companies are keeping the S&P 500 into a tight range. And a lot of times when you do get that tightness of that range, that decreasing, yeah, you do get an explosion up or down. It doesn't have to be that case, but it certainly can. And that's a long one. And what they'll oftentimes say in a lot of these technical books, or just the technical writers will say that the longer that compresses, some of the bigger moves can happen. And I've seen this myself. Now, is anything 100% in the markets? No, but you can actually see an event like this, like a long range. I've seen these hold for a year or two, and when they break out, and this is what I have seen in a lot of charts, is they break out substantially higher. I mean, they can really break out. Now, what does that mean for what we're looking at right here on the market? Well, as we just look at it, finding it, first of all, is very important. But in this class, we like to trade the Think scripts too. And so with that, let me just quickly show you. And you guys are, many of you in this class are, just technical experts anyways, but just a quick note as well. I think the vast majority of you you've seen it. If not, I'm just going to highlight this anyways. Measured move right there, right? Measured move in between that range, about 200 points. Now, if you take that 200 and you push it down here, you're getting right into about this area here. Now, that's the minimum move that you might expect on a chart. And that can be a big change because there's a possibility of, if you come over here like this and then you break down, you're getting very, very close to a longer term change in trend, and you want to be mindful of that. And so that's what I'm saying. It could be still a substantial move, TTM, Bollinger Band, trading below the Keltner channel. We're still building up on this. On individual stocks, maybe not such a big deal, but when you're looking at the 500, the S&P 500, it could mean more than just a few, just a handful of stocks. There are a lot of companies there. Now, when I say this, though, there's more that can be going on behind the scenes when we're looking at potential breakouts here. There can be longer ranges that don't register with the Bollinger Band. They don't register with the Keltner channel, and definitely not between the two together like the TTM squeeze. Okay, and that's this tighter kind of a band in here, right? We might not pick up on that. It just doesn't happen all the time when price compresses. Sometimes you see price compression and you can visually see it, and there is another indicator that it helps us pick up on that. I'm going to hit that in just a second. Before we do that, let's don't miss what maybe is in the S&P 500 that is also kind of in a sideways channel with the TTM squeeze. For example, over here, this is a company people have been waiting for a long time to kind of move. We've been in a squeeze within within Starbucks. And really what traders will say is, hey, give me a 3-day plus move, right? This is one of the classes we've taught, but we want to come back to it because there's maybe some potential for trading in here. This was a 2, a 1, a 2, a 1, but look what we had over here. A long extended range. And what does that just say? Just be mindful of the possibility of a move, a breakout or a breakdown. If you're anticipating Starbucks to break up, what would we do? We're using ThinkScript here. We have a strategy. I'll reference the class we talked about previously so you can take a look at it, because we did put it into other sorts of scripts. But how about taking out a high? We're just looking at a range. Take the range that the TTM squeeze gives you, plot across it and below it, and when do we start to exceed it? It's as simple as that. I mean, it's defining for us a tight range. So when that happens, we can start watching. Now, was that a fake out? Absolutely. That was a fake out right there. Sorry, right there. That was a fake out. We took out the prior high range right there, and we came right back down. But you notice what we did? We actually held a little bit of a higher low. We tested it again. Did we go lower? Yes, kind of another higher low. But from here, we actually began to kind of forge the beginnings of a pretty solid breakout move, folks. That was a little over. I mean, I'm not going to take it at the very top. That's one. Okay, so 105. We're just taking the very tops here from the breakout here. So we'll use this breakout, and we'll say just below 90 to 105. So it's plus 15-point rally, and that's even if you're not, trying to see anything off the bottom or a bounce off the bottom, because ultimately we saw a double bottom bounce right there. Now we're getting the same thing over here, not the same pattern, but can we still draw diagonal lines? Yes, we can. And that's the form of, and I did the best I could, folks, to give you the apex of the triangle, because generally the move will happen before we reach those two converging lines, one from the top coming down, one from the bottom coming up right there. Okay, so we still could have another move down. In fact, Elliott wave will say on a candle that there are 5 waves: A, B, C, D, E. E would be here. I don't know if we'll get E, but it may be in a position to try to gear up, to try to finally take out, boom, what can oftentimes be a long-term resistance level. Shoot, I'm getting better on my lines, but I'm still drifting one way or the other. There you go. But you see that 100's been challenged over here. When we broke below it, boom, gap. When we came up here, we got close, but the 100 level, and again, and again, and again, even today. So are we gearing up next? TTM just says, hey, put your eyes on this. Draw those lines. It can be fun drawing those lines. Seeing if price actually does follow through. That's what we're really talking about here with the TTM. So park that in your mind, okay? So trading a ThinkScript strategy. We've discussed so many, we want to use them towards market conditions. Next one, FCX. You see something similar here? It actually, I'm showing you those that just barely broke out because we had a class on this as well. But there it is. It comes out. Oh, what do you see over here? Well, could we have drawn lines through here to take a look at it? Absolutely. I would even say on the upper end right there. Bounced off that level. On the lower end? Absolutely. There's your measured move. And we know, well, based on, we know on a measured move what the projected price is. We don't know if it's going to reach there, but we have better ideas, right? Using this, okay? Now over here, what did you see? There's your breakout. Now, could it start to go here? Perhaps. Now, this is gold and silver. You're looking at about 90%, excuse me, gold and copper. It's about a 90, well, actually, it's about an 85 to 90% copper is what these guys do, and about a 10 to 15% gold in terms of miners. Those are the numbers I've got. I mean, I looked at, I thought, this is one of the companies I do look at, but basically, folks, metals, copper, gold. Yeah, those guys have been moving a little bit, right? And so too has this. But guess what? This one has been a laggard in the group. You can see we broke out above the range here. It might be part of a longer extended move, perhaps. What about gold? Just to reference it. Oh, yeah. One we don't look at too much. I don't think I've ever pulled up copper in this class, but there you go. Copper's been moving higher too. Those two together could help push this guy up. But it all started by seeing it through the ThinkScript scan that we had, right, to build this. Let's hit another one. We'll hit one more before we go on into moving beyond the TTM squeeze to see what the Bollinger Bands don't find. Okay. All right, here we go. Dollar General. Dollar General. Some consolidation here. And what direction did it break? Down. Could it have broken up? Yeah. The trend was up, but we began to break lower and lower again. Nothing through here. No indications. Literally nothing. The next indicator I'm going to show you caught it. It caught DG down here. Okay. This missed it completely. Up top, it says, though, hey, Bollinger Band, which can be an interesting time, trading below the Keltner channel. In other words, we're in a TTM squeeze for longer term compression. And what did we just do? All I did was do exactly what I've been saying. Draw along those highs. Did we break out? Well, if so, this could be perhaps a longer term. You guys know the pattern. Starts with an F, ends with a G. Flag. It's a flag pattern, right? It's a flag. It's going off to the right, and it's going off pretty sideways, and it seems to be holding its ground pretty well. And now we broke above maybe another level that a lot of times stocks hold at 150, and we're just inching above there. So keep an eye on this. We're approaching the end of earnings, right? But there is an earnings event right here. And, you know, you have to be mindful of that because you could get, I mean, here's the thing. You can get a breakout and then a pullback over here. A lot of traders will wait for that to occur. All right. Oh, yeah. There's the flag, the flag pattern. Okay. I've not seen the flag, but I think you guys have seen it. No, that's the, yeah, flag. Hey, it's close enough. It sounds almost the same. So there you go. It had just broke out from there. So interesting. TTM squeeze, I'll show you guys where we can find this discussion we had on it. And we did go through and break it down. Let's pull it up real quick. Let's just do this while I'm at it, because we're going to move on beyond that and try to pick up on what the TTM will not show us. And it's surprisingly simple to do too. Here we go. I'll pull this up right now. By the way, while we're at it, be sure to subscribe to our Trader Talk channel right there. I'd love to have you guys on board. I'll put the link in the chat. But yeah, if you're just seeing this from the recording, just go to Trader Talks on YouTube. You'll get us there, and you can check out playlists and other things as well. I'm going to go ahead and click on a playlist. Of course, they always say this, but yeah, it is free to subscribe. Yeah, we don't charge for that, but it's great because you do get access to all the playlists and other things too to kind of check out. Now let's scroll on down and let's take a look at there is it, right there. This was our one from last week that we did, which was the zigzag, but that's not it. There are other ways to do this too. I'm going to just go ahead and click on this. I'm going to go TTM. TTM squeeze. And you had some from Ken Rose in there as well. Predecessor to me, did a great job in this class. Okay. Compression. What word did I use? But yeah, there it is. The squeeze breakout is here. So there's one here. You've got other ones you can take a look at that we went through. And I'm going to post those links down below so you guys can check out those as well. But that was like 10 months ago or so. Anyhow, you got that there. Now, I was also, yeah. Anyways, let's continue. All right, that's enough of that. Let's go on to our next one. And by the way, you can follow James and I on X, Mike Fairborn CS. James Boyd CS has some great stuff there. A lot of good content. He has continuous content. So I encourage you to take a look at James Boyd CS for his X handle there. All right. Well, let's go forward here. So those longer term ranges, there are other things we could do. Now, we're just going to take that TTM squeeze and just remove it for a little bit. It's going to have to take the backstage to what we're going to go into next, folks, which is, and it always seems to pop up at the top because it starts with an A. ADX. So an indicator that was built also, back by Wells Welder. I believe this one also came out in the 1978 when he introduced like the RSI. Yeah, there were some other ones in there, some big ones too. What's that other one? Parabolic SAR was another one that he had in here. But what I'm going to show you down here is something fascinating. It's a measurement of prices. I wanted to stick to DG to kind of highlight this. It's a rarer event, but it tends to just look at price data as opposed to indicators on top of indicators, which is what the TTM squeeze does. Do you guys see this down here? I'm sure you do now because I just highlighted it, but that's a 20. Notice what we did with the 20 there? We broke above the 20. If you are below the 20, so here's 20, we go below 20, and then we go above 20. That represents condition, which we're pretty good with that. That represents a cross over, as it states, right? Just a cross above 20. It's an action that assumes that we went below first and then we went above. It's not just saying greater than 20 or less than 20, greater, I guess, in this case, but we want to know that it just happened. There's a time element to it. Cross is what I just wrote there. Cross, a crossover. All right. So with that, Let's talk about that ADX right now. And I'll just explain what's going on behind the scenes first. Now, the ADX is a combination of two things. The ADX is broken down just the way Wells Wilder had done it. He said there is a directional move plus and a directional move minus. Now, I want to explain these. Basically, the up move here, and that's the D plus, the directional plus. First of all, okay, so it takes today's high of any day. What we're looking at is any day, okay? And it subtracts out, and that's the high, and it subtracts out yesterday's high from it. So what is this doing? It's not an indicator that's looking at standard deviations or statistics or any sense or moving averages. We're looking at price. Everything, almost every indicator is a derivative of price, but we're looking at price initially here. A lot of indicators are extensions of price, open, high, low, and close, right? The vast majority, there's probably over 90% of them that just are open, high, low, and close variations. The thing about the ADX is it looks at actual price data, in this case, highs. Now that's the plus DS. Okay, now I'm going to just put this in yellow. Today's low minus yesterday's low is the DI. And what it's looking at is when those variations between the highs and the low, the high and the low, in this case, become tighter. Stands to reason. He's looking at the range. That was his focus. Where are the highs? Where are the lows? And if the highs are kind of shrinking in size, today's high, yesterday's high, today's low, yesterday, if that's shrinking and these two lines start to come together, then that ADX will drop. How simple is that? And look what it picks up on. I mean, TTM was green all the way through here, missed that range, but there are some fascinating things that you will pick up here. Let me show you this right here. So it's made up of, and I put them on here so we can actually visually see this too, but here is your plus DI. I'll put this guy on. Here is your minus DI. And by the way, this is the name of that. It's just DI plus, DI minus. Notice it's all Wilder, and I'm keeping, by the way, all of the same defaults, 14. He liked that 14 because it was half of a moon cycle. And it's one I used last week, earlier this week, sorry, in the swing trade class for the whole moving average, which is basically half a month. It's just like a 2-week. But there you go. Okay, so what we're doing is we're seeing a compression of those ranges coming in here. And when you get those two staying flat, they start to narrow, prices come down. Now, notice the plus DI starts to break up higher. You're moving above 20. Okay, but you can also move below some of these lower ranges, and it can really push it when the move of the high, I would put it this way: the high push to the upside and the low push to the downside just get more sideways. There's just not enough motion. Boom, right there. You see it right there. Okay, so we've got that down. Let me just take these off for now and show you guys like some of these that came up. So these are coming up right now, and I'll show you how I built this, and we're just going to build it right here in class. To add to this, what we're seeing in the markets is this long-term compression, NRG, right here. You see it? Broke right above the 20. Now, why I would say 20, that's something that Wells Wilder himself had mentioned, and he said this too. 10 is an extreme level. So if you're going to get below 10, and look at it, it does such a good job. Now, what's really weird is the Bollinger Band, which has a look back period, will not spot this, even though you see price compression, and it's true. It is compressing. The TTM oftentimes will not even show it. Because you have, we're looking at a Bollinger Band like on a 20 period. It doesn't fit, but this does fit. I think that was like less than, let's just double check down below. What was this? I think it's less than 10. Oh, that was 8. That was 8 down here. Really, really tight. Now, what were we saying? Draw the range when it gets tight. Same rules apply, just like the TTM. If you start to break down, it may trigger a downward move, and it did for a little bit. Now, this was part of a longer upward move, so some people don't even mess with this because maybe it's still going to go up, but you are getting it again. And what did this breakout just show? Notice we dipped. Let's really zoom in on this right now. There we go. Notice we dipped right there. Okay, we went back up above 20. So in other words, compression, yes, breakout, motion. So a cool way to actually see it. All right, I'm going to do this. You can see it right there. And by the way, remember we talked about trading them in this class. What about this longer term range? That was a long-term high level. We just broke above it. We're holding it too. So could this mean an extended long-term breakout? Sure. By the way, back to the market, because remember we looked at the TTM squeeze? You see where we're at right now? Look where we've been holding this whole time. But I'll tell you what's fascinating about this. Where did the TTM squeeze kick in? Let me show it to you. Let's compare them right now. This is just a great way to show it. Then we're going to build the scan next. So stay tuned. Give me just about a minute to explain this and we'll jump right into it. So I'm just going to show you the TTM. Boom. Where did the TTM start? Oh, right here. Where did this give us our first sign of consolidation beginning to kick in gear in terms of a downward trend? I mean, I'm seeing that right about there. Did it call it? We went about 20. We went sub 20 here. I know we dipped down for just a bit over here, but we spiked back up. Boom. Then we just went into a longer term downward move to hold really quite low. We got some major lows down here too. But notice how much earlier that is. It's like reducing the lag on the TTM right there. That's the indication. From that point, what did we do? We actually went sideways. Remember what we said about the Bollinger Band? The Keltner channel? They are delayed. Bollinger Band. Right there. Bollinger Band. I'm just going to click on it and show you. What are the time frames? Look at 20, a 20 period. It's not as responsive. And you will miss it. You can miss it. That coming up. So even on the market, you can see, and where are we at? Have we broken above the 20 yet? No. And by the way, these can both be interesting indications at this point. We're getting, you might even call this an extreme level at this point of a tightness of range. So we might be on the verge of a move. Of course, I've been saying that for a couple of weeks now, but it is getting tight. It's kind of rare in this motion, in this range, but be mindful. Is it going to be, a 7,000 or 6,800, that 200-point range in there? We shall see. But what could be an indication? TTM squeeze. Talked about this before, turning blue or turning green, and going above greater than 20. Okay, into the scan. There it is. We're going to start over. You can see my wheel is still spinning. I'm glad it does work, and we get plenty of different stocks that come up here because the market's in a range. That's why we're seeing this, and that's why we like to run these scripts around given market conditions. But here we go. Scan, Stock Hacker, S&P 500. We'll start there. We're going to add this in. So everybody, we're going to build it right now, okay? We're going to build this one in class. Here's a study. We're so used to that ADX coming up top, and we are going to use the ADX, but just not the crossover. So I deleted that. I'm going to go into add condition right there. Okay, make sure everybody's on board with us here, and I think we're good. Hey, Chris. Yeah, I did turn that histogram off on the TTM. That's true. I did. That's right, James. Yep. James 561. That's correct. We're looking for that breakout. Yeah, and a powerful level is above. Let's just do this. So, uh, just referencing, a lot of the content that Wells Wilder, who's passed away, this is an older book, an older thing, really where they didn't have a lot of indicators, but they were just looking at price data. But they were looking at 20, and I'll show you this right now. So here is the study. So we just say study right there. It's at the top of the list because alphabetical order right there. We're using the Wilder's default 14. Again, it has to be an action. Crosses above. Now, what's interesting is we're still within the indicator. So all we're saying here is value. What does the indicator have to read in order to be flagged? And that's 20. Now we said, so 20 could be one. That could get us, like we just noticed. It seems like that's holding really, really quite well. Oh, SPX, geez. I'll just start over. SPX, in that range in here, we're holding. So the ADX 20 could be one here. Now, what you might find with a fair number of stocks is you could use a 10. Now, that's extreme. The cool thing is it's fun to play with this and just see, are there extreme levels of price compression? Now, 20, though, is one that they consider, hey, that's really high compression. But there can't even be extreme levels. So crosses above could be either of these two, but just kind of distinguish between the two to note that in the chat so we're all on the same page. But 20, and here's the thing. We could run it right for today. The initial one I ran was like on 5 bars. Now we could run it on 3. Whatever you're looking for. But remember why we do this and why 5 could still be helpful. It might have already happened. In other words, we started to break above that 20. Say we were in a range here. Prices did this. They were in this range, and now they broke out above the range, and now, folks, they're coming down, which is what a lot of trades do. They don't just go like this, right? The market tends to ebb and flow. Same with stocks. And so if you're looking at 5 days right here, you're giving it time to maybe break out. And by the time you're seeing this scan, it's already on its way back down to see if it holds its support. Because a breakout holding support could be interesting. And the fascinating thing is you're still waiting for this price compression here to have an outsized move. You might also see the TTM in there start to peak up as well, the 3+ day TTM. But like I said, we're not relying on that in this case. We're just looking at the data. Now let's save it. Everybody on the same page with me? That's all it is. Just make sure it crosses above. It's close to the cross below. Of course, that's not going to work. And by the way, if it crosses below, then you could be going into a tight range, and you can think of other strategies that stocks might do better in if they go into a tight range. Okay. I'm just going to pull this up over here. And notice if I scan, it just spins. No, it doesn't. It did it. Great. There's NRG. I just showed you guys at the top. Of course, right before I ran it, I got a little bit nervous because nothing was coming up. And I'm like, okay, I saved a few of them. But I just went off some of these off the, whatever they came up on. I think they're just based upon a monthly percent or whatever, at the top here. But we looked at NRG. NRG had it. Right there. There's the break. And I'm going to go back. Let's go back over a 1 year on these. Yes. Okay. And you did get some of the TTM here because I think it went down for a while and then went flat. That impacted that TTM. We're going to keep them both up just as a reference point. But let's hit some others. Now, as we look at this, what about GE? Okay. GE has been bouncing around a little bit, but we did break. Technically, we broke above the 20. So notice, we went below the 20. We went up a little bit. We went down below. We're really, in this case, folks, we are hugging hugging that 20. We're hugging it. Shows up on our list. You can see over here, higher high, higher low, but you can visually see this is a longer consolidation, higher low. And what did we just get that whole time? Finally, a breakout high. Now, does that mean automatically it's going to go higher? No, there are a lot of different things that could mean, but we can say there was definitely some compression going on here, and this is a rather large pause. This is going back to September. So yeah, pre-Halloween, and if I just draw a straight line, we basically broke above that level just recently. We had a long extended TTM in there too. So does it meet the definition of compression? Yeah, and that could. The point is we could watch these for what now? Or possible, well, maybe mini, whatever people might trade. Maybe it's a swing trade time frame, or whatever the case is. They could look at that as the possibility of something like this, because we're coming at this was in a prior compression range. We broke above 20. Actually, here there were no signs of a TTM on this one. And look at this. I mean, that was a fairly extended run. That was 180 up to, that's actually 260. So that's an 80-point move. And there were a fair number of little minor flag patterns in there as well. KDP. There was another one right there. I just saw it. Yeah, KDP. Oh, there it is. KDP. Okay. Let's see the KDP. There it is. Another, see the sideways range right there. Now, it's been sideways for a while. TTM did kick into gear right there. What's interesting is we didn't get out yet. We didn't get out. We got out right there. That right there, if somebody was using both indicators, they would say, I have an indication off both. Some would call it like a double kind of an indication, or right there. We just barely started to get above it. But what's interesting about that? The range. We're drawing the ranges in here. There's no chance I'm going to be able to draw a range like that. Let's just do this. I'll go down here, and not with my mouse here, but look at this. We just broke above it. We just barely broke above 20 here. Now off the bottom, it's a little bit different. It's almost like a symmetrical triangle, or I actually say a right-angled triangle, because on top, we're not really seeing any movement, but down below, we are getting higher lows. It's fascinating. This gave us a little bit of an indication, hey, that we saw this. We actually got a little bit earlier, like right there, but it didn't actually signal until we began to, or just before that breakout. Let's get that lined up. I'm really curious as to when exactly that lined up. I'm going to go vertical line on this. There's my 20 right there. Okay, the day before. It's just like right there. Oh, there was an earnings event for sure, but yeah, right there. So you got the break, and where are we now? We just talked about it, right? Those upper channels breaking above, coming down, folks, and holding that point, holding that level. Okay, just a quick note here as well. No, I just wanted to state here, because I did want to just tap into one thing on options real quick, and that is this. Equity and index options carry high level, it's not super for all investors. And looking at options, we'll just talk about that, both of these, just real quick, not in deep detail at all, but just to highlight this. Because one other quick note, these are breakouts. And by the way, folks, you should have this now. You can go in here and you can track this. Real quick, last ones though, like MDT. Okay, just barely breaking above a range right now. Interesting. The bars are getting bigger at a possible support level. Does that mean we're off the bottom and a bounce? It could be. SYK, also in the medical device area. This is one that actually did just barely take out 20 here. It's been down for a long time. Ooh, look at that. It captured all that coiling, breakout, can it retest and hold? But that's, I mean, that's, what you're also seeing here is kind of the cup and handle. When you come down here and you're getting this consolidation. Okay, the final note for you guys is on the option strategy. And the only reason why I bring this up, and I'm not going to hit any specifics, but I just want to tie this in. When you start to break below something, a stock, whatever the case might be, and it drops below 20, do you see this consolidation? Are there strategies in terms of options, without going into it, we're just about out of time here, that tend to, what traders will look for to profit when prices go sideways too? We're talking about breakouts, sure, upside, but what about consolidation ranges as well? You could look at something like that too on, when the whole market's doing it as well, like we saw right over here. All right. So I'll leave you guys with that. Oh, yeah. Thanks. Yeah, folks, if you're finding you're getting use out of our discussions here, do me a favor, smash that like button. But my job is to help you guys out each and every week. I really appreciate JB being here as well. Folks, again, be sure to follow us on X, Mike Fairboard CS, James Boyd CS. And yep. And then, of course, you've got our Trader Talks channel over here. Love to have you guys subscribe. All right. Well, we kind of moved beyond the TTM squeeze today, but we did it in a way that was really designed to help us, better understand that compression, those compression ranges based upon being defined by prices themselves. And so we set out to do it. That's what our goal was. And I think we hit that. But folks, have a fun time going through and taking a look at those stocks as they do come up, especially frequently when the market's in a sideways channel. All right. Well, you guys have a good one. And yeah, great to see you all. See you next time.